Yeah, and I was wondering too, so we both are under contract on new construction right now. What were the incentives on the KB one that you guys are in?
It was difficult because this specific site is almost sold out, so their incentives are pretty much almost nothing, and if I remember correctly, I have to look at my paperwork because we looked at so many. It was like 5,000 towards closing costs, and I can't remember what the other 5 was, and then, of course, taxes, and
Yours is it's right by our houses, right? It's
yeah,
right.
it's right across Southern Hills Hospital.
Okay, that's literally like right next to my house. And that location too is really popular, so they probably don't even.
No, yeah, it's really popular. I think they're almost sold out, and she basically told us that they really don't offer that much incentive because
They
they
don't
sell
need
so
to.
quickly.
Yeah,
Yeah.
yeah. But I'm surprised. So we went under contract on one in the Southwest, like, not too far from Southern Highlands, and I feel like they didn't really need to. They have the incentive
Mhm.
right now, but the one that we went under contract wasn't even available yet because they were in demand.
Yeah.
But they still gave him the incentive. It was 7,500 towards closing costs, and then let's see, I think it was a 3-1 buy down where it starts at 3.875 and then 4 and then.
What is your opinion on buy downs? Do you think buy down is actually worth it for the client?
I guess it depends what your goals are
Mm,
because, for example, there's this one right now it's not a buy down, it's an arm, but so
yeah.
the first 7 years are less expensive, and then it can change after, which,
Mhm.
I mean, is similar to a buy down, it changes. It depends what your future plans are, what you wanna
Yeah.
do. I don't know, you might not even have the property for that long. You might only be planning to be there for a year or 2, so you don't need
Yeah.
the full amount, you just want a shorter,
Yeah.
smaller payment at the beginning, but I don't know. You could always, if you do refinance. So what I learned is if you do a buy down, it basically they take the funds and they have an escrow account that like buys it down each time it changes. And if you end up refinancing before that and it's a lower rate or it changes,
Mhm.
then they can still take that money and just take it off of the principal.
Oh,
So either way, it'll go towards that. But yeah, I don't know.
yeah.
I guess it just depends.
What your goals are.
Yeah, and in new construction, it's great because they're just offering that, but you have to think about it more if you're doing a resale because you're gonna ask for that credit from the seller, and they're gonna consider that in the price too.
Yeah, yeah. What do you know if every new home track has the same requirement for EMD?
No, they'll be different. Sometimes it's like a percentage of the purchase price, or it would just depends on what the builder sets.
Yeah. And do you know or do you understand why they require more for an investor or someone that already owns property?
I think just because it's always more for an investor, like, you have to put more down
Yeah.
to maybe it's I don't know, actually.
I was thinking about that because for our one client, they said that they require more down for investors or anybody that's purchasing the new tract as a second home. So this client has a home that he already owns and he's buying this property to move into, but they're requiring him to put more down because he owns something already. But I was thinking about it afterwards and I was like, why?
I don't know, maybe they just because you're not the one that's living in there, and you sometimes it's or different types of loans where they wanna see it's more secured
Yeah,
since it's not like you on the line,
I
eh,
see. I don't know. I thought it was weird, but
it's a question for one of our we'll ask a lender.
yeah, that is a will ask a lender question. I think it's my opinion weird that they would require more. I don't know. But when it comes to assumable loans, do you have any information on assumable?
Yeah,
Because I think that's a really interesting it's an interesting area because it's something that I think everybody could take advantage of. You want to get like a lower interest rate with how interest rates are right now.
yeah, yeah, so we had a ton of interest in this. So there's COVID, the rates were super low, and then when they
Mhm.
started going up, and, especially investors, it
Yeah.
kills them because it goes so much into their profit, but paying a high interest rate.
Yeah.
And so basically an assumable loan is when you can completely take over somebody's loan. There's other ways to take over somebody's loan, but this one you actually assume it. So it's your name that takes the place of their name. And you can do it on the majority, I think, I don't know all, but FHA loans and VA loans. But you still have to have the requirements. So VA loans, you can switch entitlement if you're also VA.
Mm,
And then that's usually the preferred way because usually if they're selling, they want the entitlement back to go buy another home.
yeah.
But if they're okay, if the veteran is okay with giving up that portion of their entitlement, they might also have more, then somebody could assume it without having to be VA,
Oh,
which is really ideal. I almost did that
yeah.
in like one of my first years. And it was basically so you would pay the difference between the purchase price and whatever is left on the loan.
Okay.
And then you just assume it and you take over their payments. And you
Oh,
do have to pay like a small portion, a percentage of the sale, just to the VA or whoever the agency is. But that's super helpful. The problem is usually when you buy a house, then it'll appreciate.
right.
So the seller wants to pull their equity out.
Yeah.
And a lot of times it's going to be a big difference between the purchase price and
Oh,
what's left on
yeah.
the loan. So you're going to have
Yeah.
to make up that difference in cash, or you have to find somebody that wants to take a second place loan. And most lenders will not do that.
Oh, I see. So, what is an assumable loan on an FHA? What if the loan has I was going to say PMI.
Yeah, so you would assume everything, and to do
So, you would take out the PMI too?
yes, yeah, and it's more difficult, I think, just in our area of business because we work with investors,
Yeah.
and to assume an FHA loan, it would change it probably. It's kinda like refinance. I think it turns it to a conventional loan. Let's just check on that. But when you assume an FHA loan, you still have to meet the requirements.
Mm,
So it'll still be credit score. You have to completely be eligible for the loan,
mm,
but part of that is you have to be an owner occupant.
okay.
Yeah.
Oh, yeah, that's right. Okay.
That part is difficult for an investor trying to.
Mm,
So basically you'd have to find a VA loan that either you're VA or they are okay with giving up that portion of their
the portion
entitlement.
of their entitlement. Oh, okay.
But it's a great, I mean, it's a great idea. And if it works out, then it's
Yeah,
beautiful.
yeah. I see a lot of real estate agents on social media talking about seller financing and just talking about as an investor that they only use seller financing and they talk a lot about creative financing. And so I'm actually really interested in learning more about seller financing.
Yeah. No, seller financing is great. Very difficult
Yeah.
to find, but it's a lot easier because there's no bank. As long as the seller, their benefit is they're going to get the interest off
Yeah.
of the payments. And for a buyer, it's more beneficial if you're not eligible for a certain type of loan
Uh,
or there's some factor holding you back. And also, you don't have to go through all the checks. The seller would be the one checking everything. Yeah, it's basically the seller is the bank.
I
So
see.
you would set everything up like a normal you would still pay escrow, and escrow would disperse it to
Hmm.
the seller.
So where are you finding all these great deals with seller financing? Where are you finding these sellers
Seller
that offer
financing,
that?
yeah, it's hard to find. You have to go like Facebook groups, find different groups for it because in general on the MLS there aren't a lot.
Mm,
I've seen a few that they'll do owner will carry, but in general it's not that easy to find because most people I don't know if it's just lack of education on it or it is I don't know. They don't want to hold a note.
yeah.
I guess that's the difficult part is to do seller financing, you
Mm,
pretty much have to your house has to be paid off
yeah. Okay.
unless you want to do a wraparound. And in that case, you would keep your existing mortgage and you would transfer title. And then you would take over whoever the buyer is, they would take over payments to you or okay.
That sounds like,
Yeah.
ooh, I don't
It's
know if
not
I would.
always some will if there's like a due on sale clause in your loan documents,
Mm,
then it's actually you shouldn't be doing it. And if they
okay.
find out, then they can make the entire amount due because they found out that you sold it.
Oh,
So that one's tricky.
yeah.
That one, but they're both good for sellers that are super distressed and need to make the payments.
I see. Okay. What else is out there as far as financing, loans, and just any way that you can find like some sort of creative finance? Say I'm a buyer that has a really low credit score. I understand FHA. For an FHA loan, credit score needs to be somewhere around 580. I'm not a lender, but I think that's probably where you want to be. But what if you're in a situation where you need creative financing and you have a low credit score or you are self-employed and you need a lot of documentation, what would be your best advice to someone who's in that situation?
I would say find creative financing. So either definitely get with a lender and see what's possible
Mhm.
because it might be an easy fix or you might have to work a few months on your credit if you have time. But I understand sometimes you have to move, you have to find a place.
Yeah.
Then yeah, search for creative financing, find an agent that understands it and that can help you find those deals.
Yeah.
But yeah, I guess there's always a way. That's what I love about real estate is there's always something different. You can always make it work if a buyer wants to buy and a seller wants to sell somehow.
That's true. What are you seeing right now as far as buyers not being able to qualify? Like, what would hold a buyer back from qualifying in your with whatever knowledge you have right now in real estate? What have you seen with clients that haven't been able to buy?
A lot of it is interest rates. They're so volatile and it changes.
Yeah.
But they have gone down a little bit where buyers have gained a lot of purchasing
Mhm.
power right now. But what is it? Maybe if people haven't had their job for that
Oh,
long because
yeah.
you need to show the steady income or honestly the most difficult is if somebody's self-employed, which I've
Yeah.
gone through too. It's really difficult.
I actually, when we lived in Hawaii, we had our own business and we were self-employed, and it was like the most grueling
Yeah,
couple of months of my life. By the time we closed on our property, I was like, "Oh my god,
yeah,
finally." It
me
was
too.
like
Like, thank goodness.
they wanna make sure that you're making money.
Yeah.
And so it was like, oh god, it was difficult, but I'm glad we got through it.
Yeah, and then once you have it, just keep the property, you don't have to do it again, but make sure
I
don't
know.
sell it, just rent it out.
And we sold it 5 years later.
Aw.
But yeah, so I remember that. I think one thing that I could say about the FHA loan is I've had an FHA loan twice. And the first time I purchased, I didn't quite understand what a private mortgage insurance was because I was very young at the time. I think when I bought my first property, I was like maybe 22 or 23 years old. And I didn't understand what that private mortgage insurance was and how much it actually was. And then with an FHA loan, you pay that forever.
Yeah, that's the problem, it doesn't go away unless you refinance it into a conventional one.
Exactly. So I think that would be something that I could pass on to another first-time home buyers that comes along with the FHA.
Yeah, like, really look at the options and have your lender show you everything and see which one works out and which one actually costs more in the end.
Yeah, yeah,
Because there's a lot more fees to go with an FHA.
yeah. The thing that's so great about it is you really don't have to put much money down, and the credit score requirement is so low, so it's easy to
Yeah.
qualify.
I've seen on conventional too, you a lot of people put 3% down on conventional.
3%?
Yeah,
Have you, like, seen what the credit score needs to be for that on a conventional? Because I know you
I'm
have to
not
have a
sure.
pretty high credit score.
Yeah, I guess maybe that's the trade-off.
Yeah.
Yeah, FHA that route.